So, markets just hit the gas again. And this time, geopolitics is actually helping. Hey everyone, it's Saturday morning, April 18th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Now, yesterday was all about relief. U.S. stocks surged to fresh record highs after Iran signaled that the Strait of Hormuz remains open, at least for now. And that's a big deal because it takes a lot of immediate pressure off global energy markets and lowers the risk of escalation. The Standard & Poor's 500 climbed 1.2%, closing above 7,100 for the very first time. That's its third straight record close. The Nasdaq Composite did even better, up 1.5%, hitting all-time highs and marking its longest winning streak since 1992. And the Dow Jones Industrial Average jumped 1.8%. That's more than 850 points in a single session. Now here's where it gets interesting. Oil prices actually dropped sharply. Both Brent and West Texas Intermediate crude fell close to 10% after Iran's foreign minister confirmed that the strait is fully open for commercial traffic during the ceasefire period. So basically, less fear equals lower oil prices, and markets love that. What's really striking is how fast markets have recovered from the recent Iran tensions. Tech stocks once again led the rally, and even Bitcoin has surged, adding roughly $10,000 since the beginning of the month. On the political side, things are moving quickly. Reports suggest that peace talks between the US and Iran could start as early as this weekend. And according to experts, there are even signals that Iran may suspend its nuclear program, which, if confirmed, would be a major geopolitical shift. Quick look at corporate news. Netflix actually disappointed investors despite beating first-quarter expectations. The stock dropped more than 9% in after-hours trading, mainly because the outlook for the second quarter came in weaker than expected. So, all in all, yesterday was a classic risk-on day, driven by easing geopolitical fears, falling oil prices, and strong momentum in tech. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. And if you want more insights, just add me on LinkedIn. Always happy to connect. See you Monday morning.